Sorry for the delay. There was some issue that was going on at our end regarding IT. We just resolved it.
Yeah. We are starting the webinar. Good evening to all of you. We are very happy to announce today we are having the webinar in association with IFSCA on the topic of bond and equity listing in the IFSC, the route to sustainable economic growth. We have with us two of the experts from the IFSCA. We have Saurabh Kumar, who is Manager, International Financial Services Center Authority, and we have Sri Akash Godeda, who is Assistant Manager, IFSCA. Before we start the formal introduction of the speakers, we start with our institute's anthem.
मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय.
Just a small introduction of our guest. Our faculties are Mr. Saurabh Kumar. He is the manager of IFSCA. He is working in the Division of Corporate Finance, Department of Capital Markets, handling matters related to capital market intermediaries, international affairs, especially related to IOSCO and other matters in the primary markets, including listing of debt and equity. Earlier, he also contributed to the development of the Sustainable Finance Framework in IFSCA in his capacity as a member of the internal committee related to sustainable finance in IFSCA. Mr. Saurabh Kumar completed his master's degree in financial management from Sri Satya Sai Institute of Higher Learning in 2014. He joined IFSCA in December 2020 from the first batch of UPSC CSE 2019. We have our another speaker today, Mr. Akash Godeda, just to share his profile. Sir is coordinating with us. Uh, he is an assistant manager in IFSCA, and he is working is in the Department of Capital Markets, focusing on primary listings. He is part of the team involved in policy making several areas, including direct listing, regulatory framework for enabling REITs and InvIT ITs at GIFT IFSCA. Sir is also handling the work related to policy and registration of capital market intermediaries, including credit rating agencies. Prior to joining IFSCA, Sir gained valuable experience in the automotive industry, working with renowned companies like General Motors and Mahindra. Sir holds a BTech degree in mechanical engineering from IIT Guwahati. With this small introduction, I welcome both of our speakers today. Sir, I think uh, sir, you can start your session. Sir, you are on live, sir.
Yeah, we'll be seeing the people. Is the PPT visible?
Yes, yes, visible, sir. You can start, sir.
Yeah, so hello everyone. Thank you for this opportunity. Today, while we'll be talking about bond and equity listing in the IFSC, before that, I would be giving a brief overview of the IFSC in general and the various verticals related to it, and especially covering the capital markets vertical. Then Akash will cover the equity listing part, and I will then cover the bond listing part, and then he will again take up the CPCDs part, and then we'll complete the presentation. So this is the format we have adopted for this session. So without much ado, I'll just quickly start the presentation. So first of all, let's understand the concept of Gift City and the concept of IFSC. So essentially, Gift City, it is the first operational smart city in India. And the first IFSC in India is the first greenfield smart city in India. So this was conceptualized by Prime Minister Modi way back in 2003-4, but actually it started developing around 2015. And then finally IFSC Act came in 2019, IFSC Act 2019. And after that, Gift City really took off. And Gift City actually it contains two different types of territories. One is the special economic zone, which we call it the IFSC, International Financial IFSC zone. That's the international zone. And then you have the DTA zone, that is the domestic area. So we are the regulator of the IFSC zone, IFSCA. It's actually the overall area is about 886 acres, and there's also plan to develop a lot of social infrastructure, schools, hospitals. Already many facilities have already been there, and more are yet to come in the next 2-3 years. We have more than 20 buildings under operations. There's huge demand, and Gift IFSC is set to witness massive growth in the next coming decade. Comparing this SEZ to the domestic, and also comparing to the foreign jurisdiction. This is we'll be comparing across multiple parameters. And this slide is very important. It helps us to properly understand the concept of Gift IFSC. So from a FEMA perspective, the domestic area, as you know, is the resident. It's treated as a resident. But here it is in Gift IFSC from a FEMA perspective. We are treated as an offshore jurisdiction, non-resident zone, just similar to a foreign jurisdiction. From a currency perspective also, while in the domestic you have the INR, in Gift IFSC, you have 15 currencies, specified currencies which are permitted. INR is not permitted. These 15 currencies, they are specified in the banking regulations, and in foreign jurisdictions, they have their own currencies. From a tax perspective, in the domestic, as usual, you have the domestic taxation. Here you have special tax carve-outs under various tax laws. And primarily, we have a tax holiday of 10 years out of 15 years in the first 15 years of its setting up. And then in foreign jurisdiction, you have tax as per offshore laws. From a legal perspective, other than the tax laws, in general, all the legal frameworks that apply to India also apply to this Gift IFSC zone. It is like Indian jurisdiction. However, there are certain carve-outs under various laws. Like for example, under Companies Act, you would have certain carve-outs for Gift IFSC specifically. And then in the foreign jurisdiction, you will have as per foreign their own legal frameworks that applies to foreign jurisdiction. From a regulatory perspective, in domestic India, for banking, you have RBI, for capital markets, you have SEBI, for insurance, you have IDI. But in this jurisdiction, in the IFSC jurisdiction, IFSC is a unified regulator across all the verticals, whether it is banking or capital markets or insurance or pension. So we are the unified regulator, and then again, foreign jurisdiction, you have different regulators. So this is essentially a very special kind of zone which has special laws. It is meant to facilitate global capital within the country and also from inside to outside. So it's kind of a global gateway of international capital. Coming to some of the unique features and distinct features of GIFT IFSC, as I mentioned earlier, it's a unified regulator, dedicated regulator. There is free flow of capital. There is no issues of convertibility. You have foreign currencies, and all our regulatory frameworks are benchmarked across global financial centers like UK, you have US, Singapore, or Dubai, or Hong Kong. So we have benchmarked most of our regulatory frameworks, keeping in mind the best practices in the foreign jurisdictions. As I mentioned earlier, we have an attractive tax regime. We have sovereign support. The government always takes into consideration special requirements of GIFT IFSC, various carve-outs. We have advantages of a very good talent pool available in the country, and we have in India low cost of operations. So this is going to attract a lot of foreign jurisdictions because it'll cut their cost. You have the talent. So you have most of the ingredients that are required for a globally financial center to take off already in IFSCA. It's a matter of time that this will really become one of, even if you see the global rankings, we are already, we have broken up in the top 50, and it is set to see a meteoric rise in the coming years. Coming to the various big business activities, I won't go into each one of them, but when you can see we have across all the verticals, whether it is banking, capital markets, or asset management, insurance, and some of the niche institutions. For example, we have in terms of aircraft leasing, ship leasing. I'll be covering in little more detail as we go along the presentation. Then we have some of the emerging business areas. For example, foreign universities and GCCs, they are GICs are coming up in a big way in GIFT IFSC. So essentially, we have moved into various sectors, and each one of them we are seeing a lot of growth. And in future, you can expect this jurisdiction to see a lot of institutions coming. Then regulatory architecture, as you saw, there are many verticals, and for each one of them, we have come out with best-in-class regulations, whether it is banking or whether it is from our perspective, we'll be more dwelling on the listing regulations and the capital market intermediaries regulations. And in this seminar, in this session, we'll be covering in detail the listing regulations, which primarily talks about equity listing and debt listing. Again, just briefly, some of the business highlights. More than 800 entities have already been registered. We are seeing massive turnover on the international stock exchange in IFSC. Close to 100 billion is the monthly turnover. Total banking assets size in March 2025 was 88 billion. Even on the bond listing, we have seen tremendous growth, more than 65 billion. On the ESG part, also around 15 billion of bond listing has taken place on the GSS segment. Funds ecosystem also taken off in a big way. More than 150 FMEs and 200 AIFs have been registered. As you see, business transactions are growing by leaps and bounds, and this is again it augurs well for GIFT IFSC ecosystem as a whole. This is just a slide showing some of the big names that have already set up their presence in GIFT IFSC. On the banking side, you can see so many foreign banks have also set up in GIFT IFSC. Some of the big names in funds industry and even on the service providers like PwC, EY, whether it is the law firms like Cyril Amachand. You have a whole host of support ecosystem within GIFT IFSC. It makes a lot of business sense for entities to come and set up shop here. Even on the DTA side, you have some of the biggest names like IBM, Google. They all have plans. Recently, only if you have seen in the news, Infosys, they have plan to set up an institution and provide more than 1,000 jobs, and even Cognizant made such a commitment. So multiple areas we are seeing a lot of interest. This is one of the most important advantages that Gift City offers. It's a competitive tax regime. First 15 years, you have like 10 out of 15 years, you have a tax holiday on business income. MAT is just at 9%. You don't have CTT, STT, GST, stamp duty here. And debt ecosystem, one of the reasons it had taken off is because of the reduced withholding tax on the interest paid on the debt instruments is 9%. And various incentives are also being provided by the Gujarat government under its IT and IT enabled services policy and GCC policy. For funds also, there have been various tax exemptions that have been given to gift IFSC entities. Moving on to specific verticals, I'll be just covering most of these verticals in brief because primarily we are focusing on the listing part. So even across in the banking services, you see we have a whole host of services, plethora of services. Like for example, you have ECBs, retail banking, treasury, and so on and so forth. Even payment services, we have PSPs also having set up their shop here in the recent times. Moving on to the one of our core part, this is the capital markets. We have the NSE SGX Connect, the Gift Nifty, as you know, is a very popular product that has been traded. Recently, you had even BSE India NX launching BSE Sensex derivatives. And we have a lot of advantages for trading on the international exchanges here. You have long trading hours. There's no forex risk as everything is traded in USD. Then they have also a framework wherein you have enabled remote trading by broker dealers. And then we'll be coming to direct listing in detail, but government has enabled both Indian listed and unlisted as well as foreign companies to come and directly list on raise funds by listing on exchanges here. And we have IFSC listing regulations 2024, which was globally benchmarked. And it has again various kind of listing for various different types of instruments, which we'll cover later. Coming to the MIA parts, we have two international, the market infrastructure institutions. We have two operational international exchanges. One is the India NX, which is a subsidiary of the BSE. And then you have NSE International Exchange, which is subsidiary of NSE in India. You have two clearing corporations, India ICC and NSE International Exchange, and one international depository, IIDI, which is also a depository for bullion. As I mentioned earlier, funds industry is one of the biggest success stories of IFSCA. You have various types of funds being set up, AIFs, ETFs, retail funds, PMS, so many types funds, more than 2,500 type investors, and targeted corpus of more than $50 billion. And you have various types of investors, sovereign wealth funds, pension funds, various international investors cutting across so many jurisdictions. So this funds ecosystem has taken off in a really big way, and we expect that in future we'll have even direct listing, which will also become very popular in the coming years. Some of the big names, marquee names in the funds industry have set up shop here. As you can see on the slide, you have some of the big names like Kotak and even foreign funds. And then you have even in the portfolio managers, investment advisors, some of the popular entities, again, they have also set up shops. So this is just an indicative thing. I'm not going into detail, just to show how Gift IFSCA is attracting all the big names here. Again, on the insurance and reinsurance, we have both direct and life, non-life, and IFSCA aims to be a reinsurance hub also. We have IFSC insurance offices also set up, and again there are regulations for insurance intermediaries. So again the ecosystem is quite well developed and it is set to grow. Aircraft leasing also, we have like a lot of demand. More than 30 aircraft lessors have been registered, and many assets have been leased, more than 240. Earlier, for aircraft leasing, most of them used to go to Dublin in Ireland, but now we have an entire ecosystem which has been developed here. Given the growth that we see in the airline industry in coming years, GIFT IFSC is set to again expand in this area in a big way. Similarly, on the ship leasing and financing front also, there is a lot of progress that has made. We have internationally benchmarked ship leasing framework also, and not be covering this in detail again. Likewise, we have made tremendous progress even on the bullion exchange side. A lot of suppliers, jewelers, more than 100 tons of gold has been traded on the bullion exchange here, and many opportunities, even silver, a lot of trading has happened, and all the entire ecosystem is in place. You have a lot of vaulting capacity, and in future you might have even bullion ETFs, digital gold products, lot of opportunities available on the bullion side also. IFSC has always aimed to be a hub for fintech, and we have encouraged a lot of innovation from tech companies. We have a fintech framework in place, 2022. We have also a sandbox where people can experiment on a pilot basis, and then once in a limited and a very controlled environment, after which if we give authorization, then they can actually set up as a fintech entity. There are also multiple incentives that have been given, and mechanisms are there in place where we can coordinate with other regulators. And we have also some tie-ups with MAS in terms of innovation in the fintech space. Coming over to sustainable finance, as mentioned earlier, more than 15 billion ESG debt listing has been witnessed in GIFT IFSC exchanges. We need massive finance on the ESG to meet our net zero commitments for 2070. We have on the banking side, we have mandated 5% of loans towards sustainable lending. And even on the funds industry, all the large funds, they have to, that is AM, assets under management above $3 billion. Compulsively, they have to make disclosures on the sustainability front. And we also have ESG funds that have been registered. So again, we are also working on other initiatives in sustainable finance that is related to transition finance, that is related to carbon trading, but those are still under progress. We have come out with a transition finance framework also that will ensure that even in the hard to abate sectors, we attract a lot of global finance, and this is very important from an India perspective. Again, another niche area where we have made tremendous progress is on the foreign universities space. We have Deakin and we have another Australian university that has set up, and we have seen a lot of universities from UK also showing interest in GIFT IFSC. We have a very good framework which is already put in place. There's a lot of flexibility in terms of repatriation of profits, in terms of ownership, and a lot of autonomy has been provided through the regulatory framework in GIFT IFSC. This is another area, global in-house centers. From an employment perspective, this is very important. As you know, India has already become a hub in terms of GICs and GCCs. GIFT IFSC also is attracting a lot of institutions that want to set up shop in this area.
Is the PPT visible?
Yes, sir, visible.
Yeah. Thank you. Another area where we have started some is ancillary services and BATF regulations. This is regarding the bookkeeping, accounting, taxation, and financial crimes. So if you see all the support services and ancillary services also, we have made quite a lot of progress. Moving over the capital market ecosystem, I already mentioned earlier about the MIs that have been set up. I'll be skipping this part. We have more than 125 capital market intermediaries, wherein we have investment bankers and investment advisors. Two credit rating agencies also have been set up. One of them is S&P, which is a very big news for India. Products available on IFSC exchanges, you have equity index derivatives, currency derivatives, commodity derivatives, depository receipts. So you can see various types of products are enabled on our IFSC exchanges. We also have a framework for access to global markets. We have a subsidiary of the exchange, Indianex Global Access, through which money can be sent and you can trade on various products across different jurisdictions. And then you have the NSE IFSC receipts also, where unsponsored DRs, it's traded on NSE IX, where Indians can invest in US stocks. Moving on to the direct listing, I request Akash to give a detailed understanding on this topic, listing in IFSC for unlisted companies and startups. Over to you, Akash.
Till now, Saurabh sir has completely given an overview of all the business opportunities that currently exist in the GIFT IFSC. I'll be covering the equity listing part. So in July 2023, Honorable FM has announced that government has taken a decision to enable direct listing of listed and unlisted companies on the international exchanges of IFSC. So after that, a working group has been formed by the IFSC along with the ministry and the SEBI. And we have worked upon all the modalities that has to be enabled for the direct listing to be enabled. And after that, in Jan 2025, the notifications have been issued by Department of Economic Affairs and Ministry of Corporate Affairs regarding enabling the direct listing framework. And certain amendments have been made by RBI in the FEMA regulations. And in August 2024, we have notified our new listing regulations. So what does the direct listing regulatory framework cover? This is a brief snapshot that covers the regulatory framework. The one is the direct listing scheme, which is nothing but FEM NDI Amendment Rules 2024, which provides an overarching regulatory framework to enable public Indian companies to issue and list their shares in permitted international exchanges. And the other is the company's LEAP rules, which is called as Listing of Equity Shares in Permissible Jurisdictions 2024. These rules cover under Section 23(3) of the Companies Act 2013. They enable that Indian companies to list on the permissible jurisdictions to begin with as GIFT IFSC. And Government of India has also issued FAQs on the direct listing scheme. And apart from all these three, we have IFSC's own listing regulations 2024. So what does the direct listing cover? Direct listing is about offering new shares or offer for sale. It covers the public Indian companies, both listed and unlisted, can list on the IFSC exchanges. The permissible holder, the definition comes under including the beneficial owner who is not a person resident in India, NRIs, FPIs, eligible foreign investors, and other non-residents. So what happens here is the Indian residents are not allowed to invest in the Indian companies in IFSC jurisdiction. For Indian residents, Indian jurisdiction and SEBI's jurisdiction will be covered, and Indians can invest in Indian companies listed on both NSE and BSE. Here for Indian companies, only non-residents can invest in the companies which for the Indian company shares who are listing on the international exchanges. Provide such a holder who is a citizen of a country which shares land border with India. For investors who are willing to invest in the companies that are getting listed on the IFSC exchanges, and if those investors are based out of countries which are sharing land border with India, then they have to take the permission of the central government before investing. And foreign investment limits, the Indian companies which get to list on the stock exchange IFSC, here the FDI limits also apply, which are prescribed under the Schedule 1 of the NDI rules. Subject to this limit, specified foreign portfolio investment under these rules. When it comes to pricing of the unlisted Indian companies, for listed Indian companies, the pricing guidelines, everything will be followed as specified by SEBI. For unlisted companies, the issue price of listing, initial listing of equity shares shall be determined by building process. Book building process shall not be less than the fair market value. Subsequent issuances can also avail. While preparing the IFSC listing regulations, we have taken to following key considerations. One is the IOSCO principles and global best practices and ease of doing business, and keeping in mind that both Indian and foreign issuers will be coming and listing their share companies on the IFSC exchanges. So based on that, our listing regulations cover both IPOs and FPOs, secondary listing, SPACs, depository receipts, debt securities, and other financial products like commercial paper, certificates of deposit. So I'll be covering a brief overview of the IFSC listing regulations. For the eligibility criteria, we have given 3 criteria under which, if you are falling in under any of these 3 criteria, you are eligible to list your securities on the IFSC exchanges. One is the revenue test. You need to have a USD 20 million in the last financial year or average over the last 3 financial years. If you're not meeting this, then you have the profit test, a pre-tax profit of USD 1 million in the last financial year or average over the last 3 years. If you're not meeting those through, and then you can have the market capitalization, that the post-issue market capitalization, you need to have USD 25 million. Apart from the eligibility criteria, filing of offer documents, issuers required to file offer documents with IFSC for observations. Issuers with issues as less than 50 million or less, they're exempted from filing their offer documents with IFSC for observations. Disclosing the offer document shall contain all material disclosures which are true, correct, and adequate to enable the investors to take an informed investment decision. Financial information of the issuers shall not be older than 135 days. Accounting standards, IFRS or US GAAP or Ind AS or other accounting standards as applicable in jurisdiction of the incorporation. If the company is a foreign company and it is not following any of these 3 accounting standards, then they have to reconcile their financial statements with IFRS. This is to make sure that the companies which are getting listed on the IFSC exchanges, the investors can do a comparative analysis between different companies if they're having a familiar accounting standards. When it comes to disclosures, these include the offer document summary, risk factors, introduction to offer, general information, capital structure, particulars of the issue, underwriting, tax implications about the issuer, financial statements, materially related party transactions, legal and other information, details of major group companies, regulated and other disclosures. Coming to offer timing, the company can offer within a period of not more than 12 months from the date of issuance of the observations by FSCA. When it comes to offer period, IPO shall be kept open for at least 1 working day and not more than 10 working days. If you got the sufficient amount of bids that are expected within 1 working day, you can close your offer period. When it comes to pricing, the issuer shall determine pricing in consultation with the lead managers and maybe through a fixed price mechanism or through book building mechanism, and the same shall be suitably disclosed in the offer document. Provided that in case of listing of equity shares by public Indian companies, the issuer shall also comply with the requirements prescribed under Schedule 11 of the Foreign Exchange Management Non-Debt Instrument Rules 2019. When it comes to minimum public offer for Indian company, it is in accordance with the Securities Contest Regulation Rules 1957. When it comes to foreign companies, the minimum public offer as well as the minimum public shareholding of 10% of the post-issue capital is mandated here. So this is the major attraction because the minimum public shareholding of 10% of the post-issue capital. So when it comes to underwriting, the issuance can be underwritten. But if it is going for underwriting arrangements, then adequate disclosures have to be made in the offer document. When it comes to anchor investor, issuer may offer a portion of the issue size for subscription by anchor investors, subject to disclosures made in the offer document. Coming to the monitoring agency, issuer may choose to appoint a credit rating agency as a monitoring agency for monitoring the use of procedures of the issue. When it comes to lockup period, pre-issue shareholding of promoters and controlling shareholders of the issuer shall be locked up for a period of 180 days from the date of allotment in the initial public offer. So what are the advantages of the issuers to go for direct listing and gift IFSC? One is you get expanded investor base and better valuation. You'll have a diversification of the financial flexibility, diversification in the capital raising process, and you'll have both global visibility and for expansion. And also the VCs, you will get a better exit opportunity because the shares that are traded on the gift IFSC exchanges are in the foreign currency, preferably US dollar. Directly, what are the benefit for the investors? The trading and investing in foreign currency So they don't have to worry about the currency fluctuations when it comes to foreign investors. And here the trading window is 20 plus hours. Our exchanges are open 20 plus hours. And there are the securities which are listed on the stock exchanges. The investors don't have to pay any tax, like no capital gains, no STT and no GST on the transactions. For listing of the foreign companies, the additional benefits that the foreign companies that have for listing on the gift type exchanges is that LRS is permitted. The retail investors can also participate in the if a foreign company is getting listed on the FS exchanges, and even domestic mutual funds are eligible to participate. So there are statistics saying that estimates suggest that more than 50% of Indian unicorn startups are domiciled in offshore jurisdiction. US, Singapore, and UK are some of the most popular examples of such jurisdiction which entities have flipped to. So it is an opportunity for such foreign companies to list on the gift FS exchanges. Coming to the listing of applications and disclosure requirements, some continuous disclosure like shareholding pattern, financial statements, material or price sensitive event information, board meetings, annual and extraordinary general meetings, change in directors, KMPs, key managerial persons, and compliance officer, resignation of auditors, adverse opinion of auditors, details of encumbrances, etc., annual reports, sustainability reporting, whistleblower mechanism, or something which the company has to do if it is planning to list on the gift FS exchanges. And till now, whatever I covered, this is a brief checklist of all the listing. One is appointment of lead manager and compliance officer. Other is the filing of application with recognized stock exchanges for seeking in principle approval. And having the lead manager shall submit draft offer document along with due diligence certificate. The draft offer document shall be hosted on website of authority recognized stock exchanges, issuer and lead managers. The authority may issue observations, if any, within 21 working days, which shall be incorporated in the offer document. The issuer, in consultation with the lead manager, will determine the pricing through fixed price or a book building process. IPO shall be open for 1 to 10 working days. The issuer through lead manager shall file a post-issue report with a recognized stock exchange within 10 working days from the date of the closing of the issue. The issuer shall make the offer within 12 months from the date of issuance of the observation by the authority. Now coming to debt listing, from here, Saurabh sir will be presenting.
Yeah, hi everyone. Debt securities, actually they can be offered in two types of forms. One is on standalone basis, or you have a series of issuances wherein you have like MTN programs as and when money is required. So we have framework for both. And the process is that you file a copy of the offer document with the recognized exchanges, and then there's a regulatory fee that we collect on the debt listing, and it is very competitive. Some of the disclosures for debt listing, one is the kind of general business information and organization structure. This is related to the issuer, and then you have issue related disclosures where details of the debt securities, the various risk factors, list of exchanges where the debt securities are listed or proposed to be listed, and the use of proceeds once you raise debt, how you're going to use it. And if at all, additional disclosures by the exchanges which are given by the exchanges, and there are certain exemptions also for certain categories of issuers. Debt listing is very beneficial here. We have globally benchmarked framework for our debt listing. This is a very simplified and very transparent listing process. You know the fees and all, and cost competitive listing fees and services. You have international settlement of securities through international CSDs. Minimum subscription, it has to be disclosed in the offer document. We have mandated that IFSCA registered credit rating agency. It's mandated that they have to take credit rating only from an IFSCA registered. And if they want any additional rating, they can take from global CRAs also. This very recently we have mandated. Then in case if it's a public issue, there is provisions for trustee and DRR and so on and so forth. Certain exempt categories I mentioned earlier, you had supranational institutions, multilateral institutions, organizations, and where sovereign guarantee is involved. This slide just shows some of the logos of the issuers. We have the big names, whether it is Tata or Adani or some of the big banks, Axis, Bank of Baroda, you have Reliance. Various PSUs also, you have NHAI, NTPC, and again, recently actually There was even a foreign-based issuer which have listed. I think DFCC Bank from Sri Lankan. It's a Sri Lankan issuer. Very recently, they've also raised 2.5 billion Lankan rupee from GIFT IFSC exchanges. It's listed on the NSE IFSC. We have framework for ESG labeled bonds also. Essentially, it is your GSS plus bonds, green bonds, social bonds, sustainability bonds, sustainable bonds, and sustainability linked bonds. So, and in terms of what are the frameworks that they can adopt for these labeling, the principles, we have flexibility. It can be either the ICMA principles, so these are very popularly adopted across the world, or you have the climate bond standards, or Asian standards, or the EU standards, which are more stringent. So we have given flexibility for adopting any of the standards, depending on it is left. It's an agreement between ultimately the issuer and the investor. So whatever standards they are comfortable with, that can be adopted. And maybe in future, even India may come out with its own standards, and that also we can incorporate in this framework. So we have a lot of flexibility in this.
The reason why we haven't mandated any framework as such, because currently there is no unified agreement regarding the recognized framework. We have only recognized these four because as on date, these four are majorly popular and investors are aware of this framework. So we have recognized over. In the future, if any other framework comes up
We can
and investors are demanding to be recognized, then IFS is always open to recognize such framework.
Then coming to the ESG disclosures and obligations, we have pre-issuance disclosures, and we also have annual disclosures, that is post-issuance until full issuance. So things like utilization report, allocation report, impact report, they give a lot of confidence to the investors. And even for sustainability linked bonds, there are KPIs, STPs based on which performance is evaluated, and accordingly we have mandated independent external reviewers also for this, and review can take different forms. It can be second party opinion, verification, certification, or scoring rating. We have a framework for ERDPPs and also in under the new capital market integrity regulations. So they can also do ratings, and they can provide a lot of ESG data products and all. CRAs are also permitted to do ESG ratings. This is just some of the data and statistics related to debt listing. As you can see, most popular among the ESG debt listing is on the green bond side. But we have all the four types of issuances: green, social, sustainable. Details can be looked up again on the website. Even all the issuers also, what they can be. This is just one in the G20 that was held in India last year. One of the bond listing that happened from GIFT City, it was showcased in as a case study in the G20. So it made sure a lot of visibility. More details can be seen in the 2023 G20 Sustainable Finance Report. The link has been provided. Coming to the listing obligations and disclosure requirements. This is on the general listing. So whether it is equity, debt, you have general obligations. There are certain principles. I'll not go into details, but it is about like following accounting standards in letter spirit, no misrepresentation of facts, publication of compliances. More specifically on the specified securities, you have various types of disclosures regarding any price sensitive informations. If you make any amendments to AOA or MOE on shareholder meetings, or change in directors, KMPs, shareholder pattern, various other things, whether you have functional website or not, all that. We have a provisions for whistleblower mechanisms also. Then submission of reports, whether it's annual report or quarterly financial reports. One thing very important again is the sustainability reporting. If the market cap is 50 million USD and above, then there is mandatory sustainable reporting that is required, and there is reporting as per different frameworks. Again, here also there is flexibility. Like for example, in India, you have the BRSR, which is mandated for the top listed companies and all BSE. Here we have given choice again in terms of sustainability reporting frameworks. Popular ones are GRI, ISSB. ISCO is actually kind of propagating this ISSB standards across the world. So it is gaining a lot of traction. TCFD, again, very popular framework for sustainability reporting. Then you have provisions even for secondary listing of the specified securities. Again, the disclosure requirements are also for DRs and debt securities, which is again a little bit. This regarding our debt ecosystem, a very detailed analysis and a very thorough and comprehensive analysis for the past year, 2024 and 25, has been done by our internal team, and Akash has played a very significant role. He's sitting right next to me. Here, this report can be found on the IFSCA website. The link has been given. You can go to the, I think, market section within that listing, and where you will get the debt report, debt market IFSC. There's a slice and dice of various types of information. You will get a lot of trends and analysis in this report. I recommend all of you to have a look at this report. We have added some new listings also, new types of products in the new regulations, CPs and CDs. So Akash will be covering that in a little more detail. So I request Akash again.
So apart from all the listing products that are available, we are this time in the new listing regulation, we also decide to allow other financial products to begin with commercial paper and certificates of deposit. So coming to commercial paper, the issuer meeting the eligibility criteria provided in the listing regulations, except here the commercial paper Indian issuers are not allowed to list. IFSC issuers or foreign issuers are allowed to issue their commercial paper in here in GIFT IFSC. The conditions are for depository need to have a demat form and held with a recognized depository in the IFSC or an international central securities depositories (ICSDs). So for the maturity period, it's not less than 7 days and not more than 1 year. The currency, it's in a specified foreign currency. The eligible investors are the issuer may issue a CP to a person resident in India or to a person resident outside India, subject to FEMA guidelines. For coming to initial disclosures, similar to all the listing products, issuer disclosures and issue related disclosures. And coming to continuous disclosures, audited financial statements, material or price sensitive information, details of defaults or delays, and if there is any revision in the credit rating. So coming to buyback, a buyback of a CP in full or part at prevailing market price and offer shall be made to the investors. Buyback offer not be made more before 30 days from the date of issuance. Coming to certificates of deposit, only IFSC banking units. The banks are present in GIFT IFSC are called as IFSC banking units. Only they are eligible to issue certificates of deposit. Conditions being they should be in the demat form and held with the recognized deposit in the IFSC or with any other internationally central securities deposits, the ICSDs. Here also the initial disclosure being the issuer disclosure, issue related disclosure, and continuous disclosures like any expected default, delay or default in the payment, timely fulfillment of its payment obligations, or if there is any material event, development or action that may adversely affect fulfillment of its payment obligation, they have to be made as a part of the continuous disclosures.
So with this, we have come to the end of our presentation. We thank you for your patient listening, and in case there are any questions, we are happy to take.
Over to you, sir.
Yeah, thank you, sir. I think it was a nice, crispy presentation, and I thank you wholeheartedly for your time. But sir, we have few questions pertaining to the topic, which is a very pertinent and very much thought-provoking one. Like, sir, the first question, what are the regulatory arbitrage opportunities and challenges in listing sustainable instruments in IFSC versus domestic exchanges like NSE and BSE?
It depends upon the kind of investors that you're looking at. If your target investors are someone in foreign like European and US investors, and they are interested in raising dollar related bonds, and they want to get listed at a significant difference in the yield. Cost base is very less when you're coming to list on the IFSC exchanges. Cost of raising capital, cost of issuance, everything are very less. and you'll get international investors, and your securities can be held both at the international deposit in IFSC as well as the ICSDs in the Europe and US.
There's no foreign currency risk also.
Yeah, there is no foreign currency risk as well. You'll be getting
Especially for businesses, if you are planning, especially for businesses, international operations, where you want to raise dollar capital. Many companies are looking to go global at this stage. Many startups. That portion of money which they want to deploy, particularly outside India, for those Indian companies, it's very beneficial to come and raise capital from GIFT IFSC. And eventually, as this center grows up, you will see a lot of South Asian companies also. They will want to raise because we have a lot of, again, the benefits he has already listed in terms of cost and kind of visibility that will happen.
Additionally, when you come to list here, you will be getting the global scale rating. If you're listing in India, you will be getting the scale Indian scale rating. Global scale rating, you will get a benefit of even getting a higher credit rating as well. And you will be compared with your global peers. So even Indian companies, if we already shared in the presentation, many Indian renewable energy companies and all such who are wanting to raise capital under the green, sustainable linked bonds, they are choosing this jurisdiction. And also the green bonds that are listed in IFSC is considered to be more than what that the capital that has been raised in India, because most of the European investors, they have a mandate to deploy capital in the transition, the companies which are looking to raise green bond for transition towards the net zero and go green initiatives. From that perspective, raising capital in IFSC for green, even the first foreign issuer like Sri Lankan DFCC bank that has listed, it's their green bond that has raised capital.
Even withholding tax, as I mentioned earlier, tax benefits for the debt investors. There's a reduced withholding tax. So
the withholding tax of 9%,
so
which
that
is
is
very attractive if you're comparing to other global jurisdictions.
Right, sir. Another question for policy and regulatory perspective is that to what extent do current listing norms in IFSC align with global sustainable finance taxonomies such as EU Green Bond Standard or Asian Green Bond Standards?
See, actually, we have, as I mentioned earlier, we have given flexibility. So we are not telling that you adopt EU standards or you adopt ASEAN standards, or it is between the issuer and the investor to come to some agreement as to what they would which framework they would be comfortable with. Now, the taxonomy as of now in India, it is still under progress. In the budget, it was announced that India will come out with its own taxonomy and that they will consider India's needs. Of course, it will not be as stringent as the EU taxonomy as and when the taxonomy comes out. EU, for example, certain sectors like coal and all, clearly it is not they're very strict about it. Whereas in India, as and when the taxonomy will come out, I'm sure that there will be more scope for things like transition finance, which will also get incorporated in the overall green taxonomy. But in GIFT IFSC, from a GIFT IFSC perspective, we are not prescribing any particular standard to be followed. Whatever standards are globally popular and whatever global investors and issuers are, as an issuer, we may want more flexibility. But if global investors want a certain stringent, then it is up to them to come to an agreement as to what is more comfortable. So we have given that flexibility, and most from the actual bond listings that have taken place, many have adopted ICMA standards and CBI standards. So these are well recognized in the global investor community, and we have given entire flexibility. So that issue is not at all a problem. Even when Indian standards come out, that also we will adopt. As and when we will keep adding to that flexibility in terms of adopting whatever standards that have come out in the ESG front.
So basically, to answer the question, we are not comparing with other global taxonomies like ASEAN bond standard or EU bond standard. We are recognizing them. So in that point of view, we are globally benchmark.
We are already
globally, which are currently being active, we have adopted them.
Right, sir. Sir, a question in regard to market access and capital formation. How can IFSCs catalyze cross-border capital flows for infrastructure and climate-related projects through bond and equity listings?
Yeah, climate related.
We have the
I
bond
already
listing.
mentioned, like we have the bond listing framework, we have the green social sustainability and sustainability linked bond framework as well. So with less with withholding tax and
Also ESG funds also.
ESG fund, we have many ESG funds as well here. So people who are looking to target the global investors who have mandate to deploy in green, IFS is the jurisdiction. We have all the regulatory framework in place, all the tax infrastructure in place.
Even infrastructure REITs and InvITs also we have a framework.
Currently coming to infrastructure, if you're raising bonds, that is already allowed. But if you're looking to build a product like REIT or InvIT, like real estate investment trust and infrastructure investment trust, currently IFS has formed an expert committee. We are working on coming up with an expert committee report soon. Once the report is in place, we'll make the necessary regulatory amendments and changes that are required in the fund management regulations. And after that, even REITs, InvITs will be allowed to be listed on the GIFT FS exchanges. From that, you can raise capital for your real estate needs of the country as well as the infrastructure needs of the country. Currently, if you're thinking to raise capital via bonds, it's already allowed.
Sir, right, sir. Sir, we have seen many innovative instruments like green bonds, blue bonds, transition bonds, sustainability linked equity instruments. What do you feel how the IFSC can help to increase the momentum of these innovative instruments through their mechanism?
See, already, as I mentioned, these are innovative instruments, no doubt. But in general, we have a fintech framework which allows for different kinds of innovation. So any innovative product, I think, which can kind of, if you have any, whether in the area of green finance or payment finance. So the fintech framework is a very large canvas. You can have a lot of innovation which is enabled through that, and then you can come into any of the regulations properly. But again, Akash wants to.
Yeah, currently all the popular green listing frameworks, all the popular instrument raising, capital raising instrument regulatory frameworks are put in place. We have benchmarked all our regulations globally globally best practices. At the same time, we also made sure that globally what are all the different kinds of ways the capitals are being raised. We incorporate all those things into our listing regulations. So currently all those listing avenues are open. Capital raising avenues are open in GIFT FS. It is up to the issuer to choose what kind of instrument or in what innovative way he wants to raise capital. In case if he is facing any difficulty in raising that and he wants some other way, we're always open to listen to the market feedback and make necessary changes.
And also our regulations undergo review every 3 years. And in case we want to have certain additions, amendments, we are always again open to it. Also, if you look at our Sustainable Finance Committee report, on the ESG front, also many innovative instruments such as transition finance is there, blended finance is there. We are also planning to sometime enable VCM market, voluntary carbon market trading also. So many things, even at some point, even in terms of accounting part, like blockchain, certain on tokenization of assets. So there's so many kind of innovative shall I say instruments or certain ideas that are always under discussion, because IFSCA is meant to be it's a new age regulator. We are very open to ideas. We are very flexible in terms of our approach. In that way, we are largely like I would say in a way different also from the domestic, because we have that capacity to kind of take a little more bolder moves. More we also kind of respond to market changes more faster. And we are always open to new ideas, market feedback, and we keep making changes, coming out with circular regulatory frameworks on an ongoing basis. So innovation is at the core of our.
Right, sir. Sir, India has the goal of net zero by 2070. As per the Paris Agreement of climate commitments. How do you think IFSCA can align with this India's goal, and how they can be a catalyst to make such changes?
So currently, actually, our goal is to meet Indian as a international finance center for India. Our goal is to currently meet those needs of India 2070 target needs. Based on that only, we have designed all our listing regulations, all the green climate bond listing framework and all. So currently, Indian corporates are also able to utilize this opportunity. Till date, we have seen that around $65 billion has been raised from debt sector, and from ESG related sector, we have seen to the north of 15 billion that has been raised. That is currently being targeted to meet the needs of the corporates to meet their net zero targets.
As you know, the net zero goals, they are not going to be like you won't have domestic funding that is going to be sufficient. You will have some deficit. So that deficit, which can be met by global capital, that's where IFSC comes into picture, and we have all the frameworks. Not just on the bond listing side, on the banking side also we have mandated, as I say, 5% of lending towards ESG, and even on the funds side also we have we have certain mandates in terms of ESG funds, that certain percentage of a large percentage of the funds have to go into ESG projects. So already across various financial verticals, we have come out with ESG regulations. So that will play a massive role in meeting net zero targets.
Right, sir. India is now focusing on becoming the 5 trillion economy with a green focus. And IFSCA like GIFT City is having a major role in bond and equity listings. So how do you feel that the economy can get a fillip through your efforts?
So like we previously answered, this is also the similar case, all our listing regulations. I'm just repeating that what you have said because similar question, I guess. So the companies which are looking to raise capital, dollar currency, everything, they can come here and raise the capital. And this is the capital which can be raised from foreign currencies, not from Indian. Normally what's happened currently is that India is currently raising, the companies that are currently listed in India, they're raising capital within the country. The additional capital that they need, they can come and list here to raise the foreign capital as well. The foreign info will be there from there to meet their needs. For debt capital as well, the bonds that are currently listed on the IFS exchanges, that capital has been completely raised from the global peers and institutions. So that capital also adds to the Indian economy. So that is how we will be going to meet the target.
Yeah, just one point I want to add to what Akash already mentioned. Like if you see one of the big developments in the recent years is a vibrant ecosystem of startups. A lot of startups have come in and they need a lot of finances for like expansion. So that's where our regulations, we have also provisions for where even on basis of market capitalization, they can come and do listings in. We have the criteria even for market capitalization. It's not just revenue or profitability test. So that enables emerging startups, Indian startups, if they want to raise global capital, they can come into IFSC. So that can be a growth engine for India's economic development.
So right, sir. Sir, presently we have seen there is a lot of focus on this blockchain or tokenization. How you feel this integration comes in this equity and bond listing in IFSCA mechanism, so that there is an assurance of this traceability and this we are also compliant with the global standards.
So currently, recently we have come up with an asset tokenization consultation paper. We are also cleanly working upon the enabling transactions over the blockchain ledger as well. This is completely different from crypto. We are looking at the innovation from the distributed ledger technologies and blockchain from asset tokenization point of view. Once that consultation is process done, when we come up with the regulations regarding tokenization, then by adopting distributed ledger technology, all the traceability and all these concerns will be addressed.
Right, sir. Sir, in case of this liquid secondary market for sustainable financial instruments, how do you feel that IFSC can play this investor confidence in enhancing the best practices which the industry wants, considering there is various scams seen in the capital markets in the recent past?
So one of the things that we adopted as a regulator is that we do consultation process for every regulation or every new framework that we bring to the GIFT IFSC jurisdiction. So we do have a consultation process where all the industry participants, all the stakeholders involved in this, they both international as well as domestic, they participate, they give us comments. We make the necessary changes on the regulation before coming up with the final regulations. So already when we are doing a consultation process, we have a draft regulatory framework which is already globally benchmarked, taking into consideration all the ISO guidelines, all the investor protection, and also about the market development. Apart from that, we will be taking consultation from the public as well, where the stakeholders and market participants are involved. Once everything is adopted, they know, okay, IFS is coming up with this so and so regulations, whether how it can affect their business. From their point of view, they also give their comments. We adopt that, and depending on all these changes, final regulations are made. So the regulations that are currently issued by IFSCA, they're already globally benchmarked. They already taken the feedback of the market participants. In that way, we are already best in business.
Adding to that, once we come out with regulations, we are also very open to various representations that keep coming on. So we keep track of, like, we keep meeting various stakeholders. They give us representations, and we make necessary changes, amendments, whenever needed. So we are always dynamic on that front, whatever required. And given, like you mentioned, scams and all various things, currently at this stage, we have not come across much of this because we are still in a nascent stage, but we have all the mechanisms in place. We have a complaint handling mechanisms, which is very robust, even though we are not getting many complaints at this stage, but we already have enough mechanisms to give a lot of confidence to the investor. In case by chance something goes wrong, there is a mechanism, complaint handling mechanisms. There is AML CFT compliance at a very high level. The FIU portal reporting is there. So in terms of our KYC, AML CFT, in terms of all that compliance, we are already very, very keen. Our supervision team is very active in terms of supervision, enforcement, and we always very proactive in this regard. So
as a GIFT IFSC jurisdiction, international jurisdiction, we are competing with other international financial centers. At the same time, we are also aware about all the loopholes and all the things that are existing in the current international financial centers. We want to be as a regulated and looked up to international financial center. So we make sure of looking at all these things while issuing.
We don't want any entities to just come and set up their back office and take just tax benefit. It is just that we want proper substance requirements. Of course, there are a lot of benefits and concessions, but there is substance requirements. We don't want to be just another, let's say, a center for, let's say, money laundering or this, some of the international centers like some of the islands, global islands. So we are not aiming to be that. We are aiming to be a very modern, a very competitive, tax-friendly jurisdiction, but with keeping in mind the need to protect the interest of investors. So we keep that balance in mind. So that's how we intend to grow in the future as well.
Right, sir. Sir, you have touched upon RETs and various other instruments or InvITs. So what do you feel, what is the growth momentum considering the it is the new buzzword and it is the future investment which we should as an investor or as a diversified portfolio, everybody should pitch in. And for the international ESG investors, how you can pitch it is a viable investment mechanism.
As a regulator, we are not here to advise clients and investors to what to choose. It's up to you which kind of instrument you use.
Depends on the need.
Depending on the need of your
and risk profile and
risk profiling, time horizon, and everything. And you better discuss with these kind of things with their financial advisors.
But
yeah, market participants, as and when the need arises, we're open to have different kind of financing instruments that will help in raising capital in a regulated manner.
So our job is, like, we are giving a plethora of options to all types of issuers, all types of investors. Whatever is, we are in the business of risk management. We kind of ensure that frameworks are in place, all the mechanisms are in place. We are facilitators. After that, it's up to the issuers and investors. We make sure all the processes, systems, everything, regulatory architecture is sound and robust. That's what we do, and we continue to keep doing.
Right, sir. Sir, the last question is that, sir, India's having various goals, including sustainable development goals, and India wants to go ahead in the SDG metrics. So how do you feel this IFSCA can help through this bond and equity listing to bridge the gap between the maybe developed countries and the developing countries?
I think in the presentation, we already showed how a couple of issuers who raised capital under our green,
Affordable housing
sustainable and
fund.
sustainability linked framework
The link to
were
the
already featured in the G20
Case
financial
study.
sustainability report. They are actually there. Those bonds have been marked against the SDG goals. How those capital raising has helped in meeting those SDG goals. So in a way, it gives an idea. Like currently, we are aiming to meet all those goals. It's up to the issuers to pick and choose which kind of goals they want to target and meet via capital raising at GIFT IFS.
See, SDGs is a larger concept. It's a country-wide effort that is needed. One part of it is like the financial angle. Like across all the sectors, if you have to develop the SDG matrices and productivities, what percentage of finance, especially global finance, you can raise, and that's where GIFT IFSC can play a role. On the ESG, especially very important, but even across various other sectors which are indirectly linked to SDGs, I think that's where IFSC comes into picture.
Right, sir. I think we had a very nice presentation today, and I wholeheartedly thank our both speakers, Mr. Shourabh Kumar and Akash Bodeta, for taking time from their busy schedule. And we also thank from Sustainability Standard Boards, and I thank our chairman, CMA Dr. Ashish Thattezar, for always encouraging us to organize these fortnightly webinars. We also thank our other SSB members, including Dr. Ranjit Krishnan, who has been instrumental in making this Vasudhaiva Kutumbakam series viable and feasible. After every week after week, we are doing this. Today is our 34th, and we hope our other webinars will be attended. We also have our ESG certificate course. The admission is going on, and I request all the interested participants also to join the course. It's available till 25th of this month, and we will be having our next sustainability newsletter, Sukhino Bhavantu, released on 25th. And I request all the participants to always give us the feedback so that we can improve our activities. And with this, we close today's webinar. I thank our SSB board members and our president, vice president, other council members for always motivating us to organize such activities. We also thank Pradeep Ramakrishnan sir in absentia. He was supposed to attend today, but due to some emergency meeting, he could not attend today. And I thank him for always helping us and giving us the opportunity to organize such webinars. And with this, we close today's session. Thank you all.
Thank you.
Thank you.
Thank you.
Thank you.